I'm sure we're all aware of the labels that we were doing yesterday. They're still there. And our projection, the market projection actually before the release was for 2,912. We have here 2,940, even higher, but we have resistance 3 today at this is the 30-minute, this is the weekly time frame. We have the resistance 3 at 2,919, 2,920. The market is attempting to support resistance 2. Right, so let's take a look at the labels again just to remind ourselves. The primary labels we have to think about are the ones in yellow bracket. 3, 4, we're still doing the 5. This is 5. I'm going to highlight these so that you are aware. We are all aware of exactly what we expect. We can highlight them very strongly. So with mixed employment numbers and of course with an exotic changing US economy because of the new administration, we are going to be seeing stronger gold, or at least gold will preserve strength. We're doing 5, and that 5 has done an internal 1 and a 2, has done a 3, has done a 4. You have a bounce right out of level 1, it's going to be doing a 5. Even you have another internal level 1 into the current growth segment. So we have growth at this point, and we have growth at this point. Okay, so this is good. Again, if we have the longs, we hold them. We simply close towards the end of the day. We don't have a trigger, but I believe if we go to the shorter term frames, or at least the intermediate term frames, we're going to be seeing a positive supported structure to hold on to longs, or to do longs if you wish. So we have, of course, a trigger here on the 45 minutes. This is a trigger. Why would you consider why would I consider it's a trigger? It's a 4, and there's a 2 back here, or higher degree 4. This one. As of that point, this is the only time that we've had indentation of a level 4. We have labeled it a 4, so it is correct. Will this carry through? If you're not seeing any negative momentum, strong degree 3 negative momentum on the 5 and 15 minutes, yes, it will carry through. It will push the market higher. We'll check it in more detail. Let's just move to the higher degree hourlies or the intermediate term structures, consistent degree 3 positive momentum. On the 1 hour, on everything else is going to look positive, but we'll still check it. Consistent positive momentum on the 4 hours. Sorry, on the 2 hours, even we get to the 4. And of course, everything. This one is even above or at overbought. Really good. Excellent on the 4 hours. I believe that's it. That's what you need to check. Excellent, of course, on the day. Excellent everywhere. This is even overbought. Just have continuation. We didn't even have the time to do a correction. Right, let's take it now to smaller frames, intermediate and smaller frames. We're back to the 30 minutes, which we're investigating. Flat market, and take it now to 15. We have some kind of a trigger on the 45. Are we getting anything on the 15? We have cycle extremes, so it means this is a valid bounce, minus 350. This, of course, can be considered a valid bounce, not out of a level 1, but out of a level 3. So if I do this, it is really a level 3. It shows trend, and it shows that you cannot really consider the market as reversed until you break that neckline. And it shows you're going to be doing a higher head. That's all, because this is a level 3. Any market that advances out of level 3 is a trending market, even if the momentum is not yet sustaining the advance. We know the fundamentals are sustaining the advance. So the market was hesitant, attempted to break higher, fell back because there was a stronger dollar today. We believe we're going to be seeing a stronger dollar going into the end of the week for reasons already explained. there is going to be, let's say, massive printing in the dollar, and therefore, I think, and therefore, going forward, there's going to be hoarding of the dollar. Hoarding means you want to uh, revert to cash, stack it, especially if there are no other revenues. Mr. Trump's economic projections were based, at least on the first year or first 2 years, on hefty trade customs. This doesn't seem to be working at this point, and therefore, in order to create more debt, you have to sustain the current level of the 10-year Treasury bonds. You also have to sustain the current short-term interest rate. And this is both showing strong yields in the dollar, and therefore you're getting a more expensive dollar. Can gold go up under this current environment? Not today, but generally, of course, the move to the upside is still sustainable just because of the risk aversion that is overwhelming stock markets and overwhelming equity markets because of Mr. Trump's economic releases, or at least of Mr. Trump's projections, economic policies and projections. All right, so what to do today with gold? I believe if we have longs, they would be in the money at this point. I think they would be in the money. Yesterday we had that correction, and we could tell that there was going to be a bounce, and that we would wait for, I believe it was 2,880 in order to close out on maximum profit. Today we're saying 2,000. The market yesterday did 2,869. I believe we're still going to get 2,680. We see here, sorry, 2,880, not 600. So the market did 2,870 or 69. We're going to get a bounce, right? And we can close out at resistance 1. We can close out probably just slightly above resistance 1. Our take on it is that the market is not going anywhere today. We are going to be seeing a 4A, we're going to be seeing a 4B, and we're going to be seeing a 4C. So it is not, let's say, it becomes futile to buy top of a level 1. So this will break out, we believe, into a 5, but probably next week. You're seeing here internal 1 and a 2 because of the negative momentum. All this now is positive traction, so we have a 1 and a 2, 3, 4, and a 5. This is a 3. We get a 4, will not fall below level 1. Should not fall below this segment. And then we'll bounce and break higher. But will this happen today? I don't think so. Probably it will happen next week, right? And there is time to redo the entry next week because we're really seeing an inverted head and shoulders. It will take time to break higher, do more shoulders, and then continue higher. So I would consider not to take longs across the end of the week. I would consider to liquidate my holdings at a profitable, of course, take profit. Meaning if we are not in good profit at 2,863 right now, we can wait until 2,875. We can wait, of course, this is resistance 1. I believe we're going to see the neckline. We can even take it to 2,880, the old market high, very likely to be seen. And then we can close out position and go neutral into the end of the week. If we have the ability, or if you're in a position to have a stop loss at entry, so assuming we had a lower entry somehow, if you are in a position to have a stop loss at entry, then you can hold across the end of the day in order to probably take the maximum benefit out of holding the position. Maybe towards the end of the day, the dollar will move towards the downside, and we get to see higher levels here, as high as 2,895. Resistance 2 today is possible in wave 5.